Good morning, everybody. Brenden Rendo with the Homes Orlando team, again, joined with Joe from Appli Home Loans. Morning,
Oh
Joe.
no, please don't tell me that my internet went out.
No, I see you.
Oh my gosh, like you froze for a brief second. I was so concerned. I was like, please tell me this isn't happening today.
I've had, since the storm, I've had that intermittent problem. Just be sitting here and all of a sudden, boom, everything goes out.
Yeah, that storm is that residual effect. Like I was just I don't. We had a sinkhole pop up right in front of our driveway this week. From I guess that water level, is starting to go down.
Yep.
And it's about a 6 foot wide little sinkhole that's about 3 foot deep. We'll definitely take out a vehicle. And we don't know when the city's going to come out to fix it.
Oh, geez.
They are saying that we're on the list, but there's a lot ahead of us.
A lot ahead of us. Yep. Well, today, you and I had been talking, with interest rates going up. We're seeing a lot of stuff in the news. People warning about, quote, bad loans again. Everyone's trying, this program, that program. And I don't see a lot of them being the same as what we had back in the previous crash. It's just, they're just not the same programs. Yeah. And there are some out there that are a real benefit. And I think one of the big ones that a lot of people have a question about, and you're seeing a little bit of fear mongering on, and it's just, well, wait a minute, actually get into the loan programs and explain it to people so they understand it for once. I think that's the biggest problem is a lot of people, no one explains. You just, you read some of these articles and it's like, well, you didn't tell me anything about the loan. You just said, oh, it does this, it does, that, like touch the point, but not the real grit of how a program works. And I think one of the biggest ones is that the 2-1 buy down program, which I think both the seller and the buyer, it can be a really good program where the buyer gets to, for the initial 2 years, get his payment down, but at the same time allows the seller to maximize his return on his investment, because our values are still holding. They're still holding, and there's ways there. Of course, the seller wants to try and take advantage of that.
Yeah, and that's the big key, is like you mentioned, like trying to maximize, because the biggest thing right now is for buyers is it's not the price of the home, it's the monthly payment.
It's the payment. Yeah.
So that's where a lot of buyers are now going, well, they want to get that price lower because the natural perspective is lower price, less payment. But the 2-1 buy down, really, like you said, it plays as a really great strategy to help maximize. And the cool part about it is there's a lot of, one thing that when I talk to a lot of clients, they go, well, what happens if rates go down? Everybody's saying rates go down. And this is where we kind of look at a couple of different pieces is, well, what if rates go down and let's say in a year you want to refinance? Whatever that is in that account for that 2-1 buy down just applies to a principal reduction for that new loan. You sell your home, it's a principal reduction. So you never lose that dollar for dollar savings that seller is putting in at the time of closing. You'll never lose it. And that's one of the most attractive parts about it is it's not like, let's say you do a permanent buy down right now, which if you do a permanent buy down and then 6 months from now rates go down, which we don't know. There's a lot of people saying they are, and some people are saying they're going to go down quicker than others. Like everybody's throwing darts right now.
Yeah.
And then everybody's going to throw a bunch of darts, and then they're going to go back to that one dart that they were correct on. And that's the one you're going to hear about for the next 5 years. But that's where, like, if you do a permanent buy down, and let's say you spend $12,000 buying down your loan from, let's say, 7.25, and you spend $12,000 on a $400,000 home, and maybe you get to a 6.875. But in a year, let's say rates are 6.25, and you refinance, that $12,000 is gone. Like you lost it. Now on the 2-1 buy down, And I think we're going to show an example of what it looks like monthly payment wise. If you refinance in a year, whatever's still in that account just goes down to reducing that. It's a principal reduction on your balance.
Which that's nice. That's really nice. Well, let's pull up a calculator that we have.
Yeah.
And let's hold on a second. Let's hit some of the key points.
Yeah.
On this.
And this is one of the calculators from one of our investors. We've got a cut, like every one of our investors is throwing the same, a similar calculator out. I just think that this investor kind of really simplified it so that it made sense and is really easy to explain for us. So if you look at it, your 2-1 buy down is basically it's buying down the interest rate for year 1. It's going to be 2% less. And then year 2, it's 1% less. And then it goes year 3 will be back to what your actual interest rate is for that loan. So right now the market's around 7.25% on a conventional loan. We just had this example of a $400,000 purchase price with 5% down. So a $380,000 loan amount, right?
Yep.
Basic 30-year loan period. Number of payments per year is how many? 12. We all pay once a month, right? And it gives you, and then we a base monthly payment if at 7.25 you see up there is $2,592.27. So it goes right into, okay, well, if the rate was 5.25 because it's 2% lower for that first year, that monthly savings is, if you want to highlight that or show it, it's $493.90.
Yep.
That monthly savings every month. So over that first year, that's $6,000 in savings. And then year 2, it's $252 every month. So that's $3,000. So the total cost on this one, that 2-1 buy down cost, is $8,957. And why is that cost important? Because the 2-1 buy down works exactly as this. It's a dollar for dollar savings. You're not actually getting, like, the interest rate of 5.25 or 6.25 isn't really, it doesn't really exist on the loan. But the seller is basically putting this credit for you, and then that money is going into an escrow account to pay that much of interest every month, so that for you, the consumer, it feels like you got a payment.
It feels like you've got this rate. Gotcha. And that's why, because it's in an escrow account.
And I lost you for a brief second. You there?
Oh, yep.
All right. Sorry, I lost you for a second.
Okay. So that's why, if you've got, by having it in the escrow account, if within that first 2 years you refinance, that's why you get that balance put back to the principal.
Exactly, because it's sitting there now. And this is the big key, is it has to be a seller concession. So the buyer can't contribute to it. And this is where it's like kind of challenging, is like, you see how this calculator says 2.239 in cost for concessions required.
Correct. Yeah.
If you get 2% from the seller, the buyer can't contribute the difference.
Gotcha.
It has to all be a concession from an interested party. So it cannot be the buyer contributing to that concession, which is kind of that like little weird quirky rule on the program. And we've seen some investors talk about, and I've seen some bad of like, oh, it doesn't factor toward interested party contributions or anything of that sort. It does.
Okay.
Fannie
I read that somewhere. I'm like, that doesn't make sense, because they can give 2, and then I can try and get another 3. That's a 5. It's like, nah.
So where I think it kind of comes into play is just bad LOs not knowing enough about the program, right, and not studying it to make sure they give a good advice. How many people in sales have done that in their history, right? Like they get an inch of information and run with it for a mile.
Yes.
But that's the piece where what it does do is it gives a lot of opportunity for the seller to be able to give something to entice a buyer to look at their house over others because inventory's gone up. But it's a big savings piece because if you were to only reduce your rate, let's say 0.3% by taking that $9,000 and just buying down that rate permanently.
Oh, Joe, you froze. Oh no, I lost Joe.
Am I back?
Yeah, wait.
Back?
Now you're back. Yep.
All right. So we're having some fun, but so kind of to repeat that if you just took that $9,000 in concessions and you bought down the rate, you may only go down 0.3% because a permanent buy down costs a lot more, and you may only save $80-$90 a month. But with this program, because everybody's expecting rates to go down, right? You can get a much bigger savings, or you get that much bigger savings, and then you're able to move forward. And as your income continues to grow, when that savings goes away, you don't feel the hit as much.
You don't feel it as much. Now, when they qualify, they still qualify at the current rates. Is that correct?
Correct. They still qualify. So if the rate is 7.25, that's the rate they qualify at. Okay. And the reason being is the 2-1 buy down is only a 2-year savings. Most investors, so QM loans, you have to qualify at the higher rate if the savings doesn't last for at least 5 years. Okay. So anything less than a 5-year savings, so in this situation is a 2-year savings, you qualify at that higher rate. So that's really, really important, is it doesn't give you more buying power.
Gotcha.
It just saves you monthly.
And I wish I had a regular seller sheet, net sheet. But when you look at this, a seller may be looking at, maybe doing a $20,000 price reduction. Because the house isn't moving, properly. And that's where on the seller side, it can be beneficial, because instead of dropping the house $20,000, dropping your net that $20,000, you can offer the 2-1 buy down to people, and your loss is actually only about $9,000. So for the seller, it can also be a benefit for the seller on their total net sheet of what they would walk away with, because we can still get the houses to appraise at that $400,000. The prices are holding pretty steady, but they get nervous. 2 weeks in, house hasn't moved, not getting a lot of action. We're continuing to see days on market go up. So you've got to put an incentive, some type of enticement in there to get the buyers into the house. And that's a great way. And doing a sheet like this for the buyers and adding it to a listing is, hey, this is what we're willing to do. Sellers willing to pay for a 2-1 buy down. Here's an example of your savings. Because buyers are going, they're talking to you, getting pre-approved, and they're going, oh, my payment's gonna, if I jump from 380 to 400, my payment's gonna go up this much. But here, I'm keeping my payment where it is. Like you said, most people are estimating that rates are gonna take a return to the downside a little bit. So you're looking at it, it's like, okay, am I willing to wait a year and a half to do the refinance, get to a better rate where I really want to be, but this is my bridge to get there.
Yeah, exactly. And that's the really, really cool part. And is it kind of gives that little bit of an opportunity to go, let's take advantage today of what's on the market, right? Before rates go even higher, if they do, and we still have an opportunity for that refinance if rates do go down. You're not kind of, what do we always say, right? Like, you marry the home, not the note, not the rate.
Yeah. Date the rate, marry the home.
There you go. Right. Now, the cool part that a lot of people don't realize about this, and it depends on the investor or lender you work with, but for us, at least, we can do this on conventional loans. for primary and secondary. But I can also do this on FHA and VA. So there's a lot of lenders are only doing this on conventional, but I have.
You have a lender? You have an investor?
Yeah.
That you froze. We lost you there.
Oh man.
You had an investor for FHA
for FHA and VA as well.
And VA. Which is great because I mean those rates are pushed up just as much as the conventional rates are.
Yeah, right now they are. So we've seen those rates push up much more. The spread that you used to have between VA and FHA and conventional is a lot smaller today than where it was even even 6 months ago.
Yeah, and what's nice with this is, sitting down with clients, working as a team together, it helps you put together a strategy when you're going in and making that offer.
Yeah,
on a house. It really does, because it's always got to be a win-win. As they say, come to a meeting of the minds. Yeah. And if I'm in a competitive situation, there's still competitive situations out there where, because the house is still, there's some that just, you're looking at them, $400,000, and I'm like, I won't give you $200 for the thing. But you want to be able to walk in and know, hey, if I am in a competitive situation, here's the breakdown, seller. If you help us with a 2-1 buy down, you're going to be able to net $10,000 more than if you just give away concessions over here and drop the price $5,000. So it can be used as an advantage in that format as well for people.
Hey, Brenden.
Yeah.
Are you there? I think I'm going to drop off because I think my signal is just bouncing nonstop and I've got nothing.
Okay.
But if you have any questions, let's go back. Definitely don't hesitate to reach out, give me a call or anything on this, or anybody watching this. But I'm going to drop off because my signal, I've just lost it and it keeps flashing.
I think we got everything covered very well.
Awesome.
On this, I'm going to go through the numbers, but we'll let you go at this time. All right.
All right. Appreciate you, Brenden.
We will chat with you a little bit later.
Absolutely.
So that's our 2-1 buy down. And that's why we wanted to go through with you today, because it does offer a lot of incentives. So let's jump out of that and let's jump back into our numbers for the week. And the week after the storm, really, we did pretty good. We still had 440 sales, so a lot of homes made it through the storm and were able to get closed. Our median price dropped just a hair, about 0.8 of 1%. And if we go down to our next slide, we're going to see our original to final price. We jumped up here, but that's really kind of misleading, because if you come over here to over $1 million homes, someone sold a house really cheap at roughly 76% of the original list price. So you kind of got to take those numbers with a grain of salt and really look at the breakdown between, we're going to look at the 300,000 to 400,000, which is a good portion of our market. And we're still seeing that houses are going roughly about 4% less than the original price. So when you look at the 2-1 buy down that we're going through earlier, it's a great tool, because we know we're averaging about 4% less. So if we can go in and get that 2%, that 2.25% from the seller, we can help you get that payment down. Because when you look at the final numbers, we're sitting at roughly 98% of the final list price. So there's that room in there to utilize and really take advantage and help get your payment down for the first couple of years. And here we are through the chart again. Sales prices, you'll see the sales price average went up a little bit, but our median's kind of holding steady. And if we look really since July, Orlando's been very steady in the median sales price. We took a little dip, but we kind of flattened out again. And our sales are really kind of flattening out as well, to where we're hovering, at that 500 homes per week range, and dipping a little bit, but that we just had a hurricane, so that's understandable there. Now, this is these two are probably the two most interesting ones that I saw from this week's numbers. And that first one, excuse me, is that our average days on market has taken a little bit of a spike again, to where we're moving up to 37 days. And the time to close is actually, listing to close is going up to 75 days. So we're starting to see, and expected this with interest rates going up a little bit, that we would start to see days on market increase, start to see time from the time it's listed to the time to close, that's going to take a little bit more. And then the other thing that we're looking at is our total active listings. And you can see here, really since end of July, our inventory has really flattened out. So that we're hovering right around that 4,700 homes for sale, which still historically is a very low number for the Orlando region. But with the number of buyers going down, articles coming out this week that we're now what 30-year low on mortgage applications since like 1989, somewhere in that ballpark. So the number of buyers is down while the inventory has flattened out. So that's actually helping us to stabilize the market as far as pricing. We're not seeing some of the price decreases that they're seeing out west. One of my friends who I talked to in San Diego, they've averaged about 9. They're off about 9% right now from their peak. So Orlando's holding steady. A lot of that again has to do with, I think, the size of our market, the economy within Orlando, the economy within Florida, and the fact that we still are getting people looking to come to Orlando, and we still don't have a super amount of homes. But then it's always important also to get into the little sub areas of Orlando too. The other interesting thing is we are starting to see the foreclosures pick up. So that this past week, we've seen roughly about 27 foreclosures go through the system. And I think we're going to continue to see that because the moratorium is done on foreclosures, and it still takes time to process them through. I follow a lot of the foreclosures, and you'll see that the sale date's set for, say, September 15th, gets delayed, gets pushed to October 1st, gets delayed, gets pushed to the end of October. So you're going to start seeing more foreclosures popping up through the system as well. So those are our numbers for the week. I hope you enjoyed the breakdown of the 2-1 buy down, and that it can be a true asset for both the buyer and the seller, can make it a win-win situation for all parties involved. If you have any questions, reach out to both Joe and I. Our information is down below. And if you liked it and you're watching on Facebook, please give us a like. If you're watching on YouTube, please give us a thumbs up and subscribe to the channel. We look forward to seeing you again next week. Take care. Have a wonderful day. Bye-bye.